These stocks that we have for you today are the total return superstars that most investors are just, well, they're not looking at. Hold on to your seatbelts, folks. This is going to be a good one. A year ago, this video would have featured a Hammond stock or two, and just how many of us wish we got in on those ones before they exploded. Side note, I was talking about them a year ago, and I know some of you did actually get in early. So kudos to you. I scoured the stock screeners to find the motley crew of profit-making underdogs that may just be set to be on everyone's mind in the near future. These stocks have the history to prove what they can do and the trajectory to make some serious green in the future. I will add that 4 of these 5 stocks have never been featured on the channel. In fact, I will not tell you which one we have seen before, so that one of you can have those bragging rights for telling me which one that may be in the comments. Join today's conversation. Let me know in those same very comments if any of these stocks were already on your radar. Thank you for your participation. If you love this sort of content, be sure to subscribe for more. And another huge thank you for that click. I always love letting you guys know how I qualified the list, as it sort of gives you some insight into what I look for when I'm searching for a stock. For this list, I was looking for stocks over $5 just to weed out those penny stocks. I also wanted at least a small dividend on these stocks to make them, well, total return stocks opposed to growth stocks. Honestly though, most of these stocks are getting a good chunk of their return from their growth. I was also looking for a positive return on equity, at least a 10% return on their 1-year and year-to-date returns. In addition, I also wanted to see at least a growth of their profit margins by 5% or, well, even better for the last year. When a company is increasing their profit margin year over year, it can be a very good sign of healthy fundamentals. So, without any further ado, let's do this. Kicking off this list, we have Silver Corp Metals with a ticker of SVM. They are based out of Vancouver, British Columbia, and, well, as their name suggests, they are involved in the acquisition, exploration, development, and mining of mineral properties, primarily focusing on silver, also a little bit of gold, lead, and zinc as well. Their current price at the time of recording comes in at $5.36. They have a market cap of $947.76 million, and their beta very, very average at 1.02. Their earnings per share come in at 0.23, and they have a price-to-earnings ratio of 23.30. That return on equity comes in at 7.50%, and this is a nice one. Their debt-to-equity ratio is 0.07%. So not a lot of debt here, and I always like that. Switching over to their dividend yield, that comes in at 0.64%. It is a semi-annual dividend, meaning twice a year, in the amount of 1.3 cents USD per share. The payout ratio, you know it's low. It's 14.71%. Switching over to their returns, this is the only negative you're going to see on the entire list today. Their 3-year return on investment comes in at negative 31.81%. Factor in the dividends, we do get a total return of negative 30.81%. Like I said, silver did have a little bit of a rough time in the beginning, but they have really turned that around. That's why I included them on this list. Looking at their 1 year, you can begin to see this. Their return on investment for their last year is 14.29%. Factor in the dividends, we get a total return of 14.84%. And if that wasn't enough, silver really ratcheted up this year, so their year-to-date return on investment comes in at 53.14%. Total return, 53.14%. Yeah, they haven't received a dividend yet this year. This is a company that really does have a diversified portfolio of high-grade mineral assets with a strong focus on cost-effective mining operations. With gold and silver looking pretty darn good in the markets, that can only bode well for this stock. Coming in at number 4, we have Propel Holdings with a ticker of PRL. They are based out of Toronto, Ontario, and they are an online financial tech company. They provide a platform that facilitates access to credit products, such as, well, installment loans and lines of credit. The company also offers marketing, analytics, and loan servicing services as well. At the time of recording, their current price comes in at $23.98. They have a market cap of $823.24 million. Their beta comes in at 1.89, making them almost twice as volatile as the market average. Their earnings per share, 1.24, and they've got a price to earnings ratio of 19.34. That return on equity, this is a nice looking one, 33.67%, and their debt to equity ratio, it is high, but once again, we're in the financial services, so I did expect it to be high, 191.29%. Looking at their dividend, this may be the largest dividend on today's list, actually. Their yield comes in at 2.168%. It's a quarterly dividend of 13 cents per share. Payout ratio, 34.40%. Looking at their returns, their 3-year return on investment, that comes in at 136.02%. Factor in the dividends, we get a total return of 145.82%. Switching to their 1-year return on investment, that comes in at 224.05%. Total return after we add in the dividends of 229.80%. That is not too shabby. Their year-to-date, the return on investment comes in at 85.32%. Total return after we add in the dividends, 86.24%. This is a company that really has demonstrated some great growth. Now, of course, this has been in part powered by a 35.71% increase in their revenue in 2023. As well, they've also had significant growth in their earnings, so you can't beat that. They have also been recognized as one of the fastest growing companies in the Americas by, well, the Financial Times. This definitely indicates some strong market potential and, well, investor confidence. Taking our third spot, we have Hudbay Minerals with a ticker of HBM. They are based out of Toronto, and they are a diversified mining company primarily focused on the discovery, production, and marketing of base and precious metals, including copper, gold, silver, zinc, and molybdenum. Their current price comes in at $13.98, and they have a market cap of $4.91 billion. Their beta comes in at 1.96, so they are twice as volatile as the market average. Their earnings per share come in at 0.33, and they have a price to earnings ratio of 42.36. Their return on equity comes in at 4.36%, and they have a debt to equity ratio of 62.72%. Switching to their dividends, they have a yield of 0.143%. This is another semi-annual dividend, so it's paid out in the amount of 1 cent per share. Their payout ratio, nice and small, 6.06%. Looking at their return on investment for the 3-year, that ROI comes in at 52.95%. Factor in some dividends, we get a total return of 53.61%. Moving to their 1-year, the return on investment comes in at 124.40%. Factoring in dividends, we get a total return of 124.72%. How did they do this year? Year to date, return on investment 92.56%. Add in some dividends, we get a total return of 92.70%. Holy banana bread, that's pretty darn good. They have shown strong potential for mine life extension with new mineralized zones and have reported record financial results for 2023. Their focus on copper, a critical mineral for green technologies, positions them well for future growth as, well, global demand for copper is increasing. In our almost top spot at number 2, we have CES Energy Solutions with a ticker of CEU. They are based out of Calgary, Alberta, and they provide consumable fluids and specialty chemicals for the oil and gas industry in North America. Their offerings include drilling fluids, production chemicals, transportation and logistics, environmental services, and laboratory services. Their current price at time of recording comes in at $6.79, and they have a market cap of $1.60 billion. They are pretty volatile with a beta of 2.41. Their earnings per share does come in at 0.71. They have a pretty low price to earnings ratio of 9.56. That return on equity, loving this one, 26.28%. Their debt to equity ratio, that comes in at 60.16%. When we look at their dividend, they have a yield of 1.767%. Quarterly dividend of 3 cents per share. Payout ratio on that is 14.79%. Let's look at their returns. On the 3-year return on investment, that comes in at 292.49%. Add in those dividends, we get a total return of 305.49%. Switching to the 1-year, that return on investment comes in at 185.29%. Factor in the dividends, we get a total return of 189.71%. This year, year to date, the return on investment comes in at 95.11%. Total return, 96.70%. Their diversified portfolio of products and services, along with the presence in key oil and gas markets, makes them a pretty stable successful investment. It should go without saying that they also experienced a very strong financial performance in 2023. In our top spot, at number 1, we have Drax Group PLC with a ticker of DRX. They are based out of, well, Selby, North Yorkshire, over there in the UK. They are a renewable energy company engaged in renewable power generation, the production of sustainable biomass, and the sale of renewable electricity to businesses. They produce and sell biomass pellets from facilities in North America. They generate power from sustainable biomass, hydroelectric, and pumped hydro storage assets in the UK, and they also supply electricity and gas to non-domestic customers in the UK. Their current price at time of recording comes in at $15.73. Their market cap sitting at $513.43 million. This one's not as volatile as most on the list. Their beta comes in at 0.63. Earnings per share, they come in at 1.15, and they have a price to earnings ratio of 13.68. That return on equity, lovely looking 26.21%, and they're not too bad in the debt department. Their debt to equity ratio 30.13%. Looking at their dividends, they have a yield of 0.127%. It's another one of those semi-annual of 1 cent per share. Payout ratio extremely low, 1.74%. If we look at their 3-year return on investment, it comes in at a staggering 1,039.86%. Holy banana bread. That's pretty high. The total return after we factor in the dividends, 1,044.20%. On the 1 year, still almost as impressive, well, maybe half as impressive. Their 1-year return on investment comes in at 536.84%. Total return, 537.65%. Let's see how they've done so far this year. So their year-to-date return on investment, 128.63%. Factor in the dividends, we get a total return of 128.78%. That's definitely not too shabby. Drax Group is noteworthy for its significant role in, well, renewable energy production and their commitment to sustainability. Their diversified operations in renewable energy and sustainable biomass production position them as a key player in, well, the transition to cleaner energy sources. This makes their stock an attractive option for investors who are focused on, well, environmental, social, and governance criteria, ESG. These stocks today are definitely some interesting ones, and it is almost embarrassing that 3 of them have stayed completely under my radar for so long. Nonetheless, I am happy to have found this lot, and I have a feeling I may have to add at least one of them to the 0 to 100K challenge. If you are interested in any of these stocks we looked at today, don't forget to put in a whole heap and helping of due diligence before you place any of your hard-earned money on the table. Let's continue that learning journey. Check out this video on my top 10 worst stocks, and I will see you in the next video.